Hey, what's going on, fellow people of YouTube? In this video, I'm going to break down the simplicity and the basics of supply and demand zone trading, why most SMC traders fail because they simply cannot nail down the basics to the T, why they are marking out the wrong zones, without understanding the structure story behind their supply and demand zones and the reason and the cause of those specific supply and demand zones, a quick 2-minute crash course on the real basics of supply and demand, how you can also trade counter trend, a live chart walkthrough of my GBP USD trade on how I made $5,000 on this trade, which is a 1 to 10 risk to reward with a $500 risk on my prop firm account. And at the end of this video, I'm also going to go through some of my SMC TMA band hedging EA results, which I'll show you guys how you can get access to that as well. So I'm not going to waste any time. We're going to dive straight into the charts. I first quickly want to cover with you guys the ultimate basics of supply and demand zone trading. So in this video, I'm going to prove to you how powerful it can be simplifying and nailing the basics to the T of supply and demand zone trading while understanding your structure story. So everything I do in my trading system is all fully mechanical. It's an easy set of rules to follow that I'll break down for you guys in this video that will hopefully help you on your journey to becoming a profitable trader. Now, I know most of you watch my videos to learn about affiliate marketing or dropshipping or e-commerce. The reason I haven't been making content on that anymore is because I'm not doing that anymore. I've moved into trading full time. I've acquired the skill over 3-4 years now while doing YouTube, and the last year or two, I've really become extremely profitable to the point that it can overtake all of my e-com and affiliate marketing businesses in terms of revenue. That is why I would rather talk about content that I'm actually doing on this channel and not talk about bullshit that I'm not doing. So here's a quick 2-minute crash course on the ultimate basics of supply and demand zone trading. Order blocks, institutional supply and demand zones, whatever name you want to give them, happen everywhere in the markets, and you get to a point where you don't know which supply and demand zone to highlight. So for example, over here, price perhaps has multiple supply zones forming from each and every internal high and internal low, and you aren't sure whether you should buy off this supply and demand or whether you should be selling off these supply zones over here. And that is where a lot of SMC traders overcomplicate things without having a look at their structure story, and all they need to go to is back down to nailing the basics of supply and demand zone trading. The whole key to supply and demand zone trading is to identify where the big money is in the market so that we can get on the right side of the market and ultimately trade alongside those big banks and financial institutions instead of against them, because ultimately we want to get those high probability moves, which is where the profits is lying. The ultimate way of finding high probability setup supply and demand zones is not necessarily looking at supply and demand zone itself. It comes down to identifying structure, strong lows, weak highs, or strong highs and weak lows. And it's very easy to identify that. So every supply and demand zone needs to have a reason behind why it is a supply or demand zone. So if we take a look, for example, at this basic mind graph or schematic over here, we have price busy respecting strong lows and taking out the weak highs. So these demand zones are creating those institutional breaks of structures to the upside. So they have much more reasoning behind the reason it's a demand zone, whereas these supply zones that have left a candle with perhaps a internal or smaller time frame breaker structure to the downside, but understanding that demand zones are busy flipping supply zones and taking out supply zones, demand is heavily in control. So the entire structure story behind this specific example is that demand is in control, breaking the weak highs. So therefore, they validate as valid demand zones, as these supply zones won't validate as a valid supply zone for me, because a valid supply zone needs to have specific criteria in order to qualify as a supply or demand zone. So for example, these supply zones didn't do anything. They didn't create any break of structure. They didn't shift market order flow. They're just there getting taken out by demand zones that is currently in control. So therefore, in this particular example, it would make more sense to look for long positions on demand zones instead of short positions on supply zones. The idea behind this is to target the weak structure that is currently failing. And if we look at a more complex example, obviously the charts aren't going to be printed this neat to you on your charts. This is more or less what chart and price action will look like when supply and demand trading. So as we went through this example, demand is currently in control, breaking the week highs with constant bullish order flow. So therefore it would be valid to look for longs on demand zones that are busy targeting the week highs. So yes, over here we have price perhaps on an internal or smaller time frame respecting supply zones. All right, so here price had that internal breaker structure to the downside caused by a valid supply zone. With the inefficient push and liquidity buildup, price mitigates that supply and continues to go short. But what's most important here is understanding the overall intention and bias of the market is for price to mitigate strong lows, respect these strong lows, and target the weak highs. So therefore, yes, it would be valid to look for short-term sells to target areas of demand at the strong lows to then target the weak highs. This is just a mind graph example of what it would look like to trade counter trend, is looking for shorts to ride that pullback, as after every break of structure, price occurs some kind of pullback, which would be valid to counter trend ride that move. Exact same criteria for a bearish market. If price is currently targeting those weak lows with strong highs, it would be more valid and makes sense to look for shorts to continue with the expectational order flow to target the weak lows, as price is busy taking out and flipping demand zones, showing that supply is heavily in control, creating these strong highs. So in another sense of counter trend trading, so this will be included in the counter trend trading module of this video, is it is 100% valid to perhaps look for that internal change of character, to look for intermediary longs and short-term long positions to target supply zones and ride that overall pullback to supply zones to then reverse and start looking to target the weak lows. So that is what I mean. It is 100% valid after a break of structure to look to ride these pullbacks to then continue targeting those weak highs. Same thing with a bear market, would be 100% valid to look to ride that pullback with long positions to target areas of supply to then target the weak lows. All right, so let's look at a live example of just following out our structure story before we go and mark out supply and demand zones. So in my specific system, there are 3 different types of structure, that being swing structure on the 4-hour time frame, internal structure on the 15-minute time frame, and your 5-minute, 3-minute, and 1-minute time frame is all for entry confirmations. So if we just had to briefly go and have a look at putting the basic mind graph that I just showed you into action on a live chart walkthrough. All right, so your swing structure is obvious structure that you can go and see. So let's go and start over here. Price had that 4-hour break of structure to the upside with a candle body closure. Price then had that internal structural shift with a breaker structure to the downside on the 50-minute internal time frame, catering for that overall 4-hour pullback. So this is the example of it would be 100% valid to ride that pullback after the break of structure, as after every break of structure, number 1 rule, price will always pull back into the previous swing structure range. So this would be your 4-hour break of structure, which was created by this 4-hour strong low. So that can be highlighted as our strong. After price had that pullback with an internal breaker structure to the downside, signaling we're now in the pullback phase of the overall 4-hour swing structure. This would then become our 4-hour week, which then would be 100% valid after price had that internal break of structure to the upside, looking to mitigate areas of demand to then target those 4-hour week highs, which then had another 4-hour break of structure to the upside, which was now created by this 4-hour strong low. So what can we expect after prices had that 4-hour break of structure to the upside is to have that pullback, which price had that pullback with a internal breaker structure to the downside, which is created by this 4-hour week high. So this would be our 4-hour week. All right, so after price then had that internal breaker structure to the upside, price then comes to mitigate areas of demand, which you can then look for valid entry criteria to target the 4-hour week highs. Price then had that body closure above the 4-hour week high, mitigating, creating a new swing structural range. This 4-hour break of structure was created by this new 4-hour strong low. After the 4-hour break of structure, price has the pullback with the internal break of structure to the downside. Price then mitigating areas of demand. This would be a valid wick zone, and then creates that internal break of structure to the upside, mitigating more areas of demand over here, looking to target the new 4-hour week high, which price had that body closure above on this candle over here. So all of these wicks is just wicks and sweeps, no valid body closure yet. After the valid body closure, that would be your valid break of structure to the upside. So after price had that break of structure to the upside, which was caused by this new strong low, price then had that internal time frame pullback, which would be valid to look for shorts to ride to the 4-hour swing strong. So then what would our expectational order flow be? Is for price to respect the 4-hour swing strong and continue targeting the 4-hour week highs. But price never did that. Price never printed that internal break of structure to the upside, but instead just flowed bearish and took break of structure to the downside. So now, this would be our 4-hour boss. So now swing structure has shifted bearish. So now we can expect price to target weak lows because strong highs are now in play instead of weak highs. So let's continue with marking out our 4-hour swing structure. Just ignore all of these labels over here. I know this looks like a lot. That's because I've got a lot of labels on the lower time frames as well, but we will cover this now. So after price had that 4-hour break of structure to the downside caused by this new 4-hour swing strong over here, we can expect price to pull back into the previous 4-hour swing range, which is from the 4-hour low to the 4-hour high. So that's our swing. That's our swing range right here. This is our new swing range. So price has that breaker structure to the downside. The pullback into areas of supply over here creates that internal structure time frame to the downside, looking to target these weak lows, which was then another 4-hour break of structure to the downside created by this 4-hour week high. Price has that pullback into relative price action, respecting areas of supply, has that internal time frame change of character to now target the 4-hour week lows, which was another 4-hour break of structure. So as you can see, as I'm marking this out, order flow is always printed beautifully on the markets. It just comes down to the basics of learning how to actually go and mark it out and see it visually yourself. And the biggest reason most people fail with SMC is because they don't look at the higher time frame bias, the higher time frame swing structure, before trading on the lower time frame supply and demand zone. So let's just find a good example over here. So over here we perhaps had a 100% valid supply zone that had perhaps a change of character over here or a break of structure to the downside over here. So people now perhaps looking for sells, but without understanding the higher time frame narrative of the market, that our expectational order flow is for price to rather respect these strong lows and take out the weak highs. It would be more valid to look for longs on demand zones to target those 4-hour week highs. So that's all it comes down to, is understanding the reasoning behind your supply and demand zones and the structure story behind them. So let's continue marking out our supply and demand zone. So over here, we've now had that 4-hour break of structure to the downside created by this 4-hour week high, which price had that break of structure, that pullback to relative price action with that M15 break of structure to the upside. And price could not respect the 4-hour strong high, but instead broke structure to the upside. So now swing structure is now shifted bearish. After that 4-hour break of structure to the upside, price had that pullback into relative price action in the previous 4-hour swing range caused by this 4-hour strong. All right, so now this is where we are at current time. Price had that pullback, mitigated areas of demand, and then broke structure to the upside again, created by this new 4-hour strong low. So let me come down to the 15-minute time frame, which is the internal structural time frame, and I'll go through with you on how I caught this 1-19 risk to reward trade on GBP USD. So all we go and do now is, like we applied our 4-hour swing structure, we go and apply the exact same thing on the 15-minute time frame. If I bring back price over here, let's just say we were here at this time, this would currently be our 4-hour swing range. From this 4-hour weak high to this 4-hour strong low is now our swing range. So any price action that happens in here on the 15-minute time frame is what we call internal structure. So over here on the 15-minute time frame, we had that M15 break a structure to the downside after the previous 4-hour break of structure to the upside, which then signals after that M15 break, price has that pullback into areas of supply, which is 100% valid to look for shorts to ride that overall 4-hour pullback. Price still breaking structures to the downside, mitigates areas of demand, then creates that M15 break a structure to the upside. So this would be an M15 boss. Price then has that pullback to relative price action, mitigating areas of demand to continue breaking structure to the upside. So price then printed another breaker structure to the upside caused by this strong low. At this time, after this breaker structure, price had that pullback, mitigated areas of demand and fair value gaps, breaker structure to the upside. So demand was clearly in control and price looking ready to target the weak highs. So after this internal break of structure, which was caused by this valid demand zone over here with the inefficient push, the break of structure, liquidity build up with equal lows. So over here would be equal lows above the demand zone. I do cover more specific criteria of supply and demand zones in my private community. However, in a nutshell, your supply and demand zone needs to have 4 strict criteria. A demand zone or supply zone needs to have that inefficient push or create a fair value gap above or below it. It needs to have a liquidity buildup. It needs to create a break of structure, and it needs to be unmitigated. So also over here, we had more valid liquidity. On the 3-minute time frame, which I used for a flip zone, is after price mitigated my 15-minute time frame zone, price then had that fractal change of character over here, as this was the most recent strong high that took out the weak lows. Price then took over that strong high and created strong lows. Price created a valid demand zone with the inefficient push that created that overall fractal change of character. Price pulled back and gave me a triple M confirmation. So I entered on this candle over here with my stop loss below that zone, targeting the M15 swing week high for a total of 390 pips and 19 risk to reward ratio. So on this trade, I risked, I think it was about $300 for about a $5,000 return on my funded account, which is a really good risk to reward ratio. So to put this into perspective, I have to take 19 losses in a row to break even this trade alone. And that is my favorite concept of risk to reward trading. So yeah, all this trade was understanding the higher time frame narrative of the market, our 4-hour swing structure, understanding that price is looking to target the 4-hour week highs. I could have even set TP to the 4-hour week high and target a 40 RR, but on this trade I just targeted the 15-minute week high. And all I'm doing is trading expectational order flow, structure, supply and demand zones with confirmations. No fancy ICT, no fancy fair value gaps with liquidity sweeps, no fancy Judith swing models, no fancy silver bullet models, pure price action, supply, demand, and confirms with good risk management. So this was the first trade that I took this week. The analysis and trade was sent to my Discord community, as well as a 40 RR gold trade from 2 weeks back. And then after this week, I just had many partial trades. That means we hit, you'll see over here on every trade, at the most recent, over here, 3 minutes breaker structure to the upside. After that hits, I then set break even and close partials. So most of this week was partial trades of 1 to 2 or 1 to 3 RR, but again, thanks to risk management, it was still an entirely profitable week. For those of you that are new to the way that I trade here on my YouTube channel and here at Millionaire Mindset Funded, it can be very intimidating and a lot for you to take in. What I recommend is start off with the 4-hour swing chart alone and just practice marking out your 4-hour structure and practice highlighting each and every strong high and strong low and looking for supply or demand zones that price is busy mitigating off of. I do have a far more private mentorship course on this in my Discord community, which is the link in my bio of this YouTube video or the description of this video. I will leave a 50% off coupon for that as well. So to just give you guys a quick breakdown of the Discord community over here, I'll open this up on my screen. First and foremost, you will get a welcome message explaining what you'll get out of this Discord and all our relative channels in the Discord. We then have our full ICT and SMC mentorship from the start here, introduction, all the way to section 1, which covers understanding the supply and demand zone basics. Section 2 goes over structure basics, complementing the lower timeframes with higher timeframes. And then 2.4 starts off with the important stuff, 3 types of structure put together, which is what I explained in this video. Section 3 goes over understanding liquidity and liquidity types. Section 4 goes over entry confirmations. Section 5 goes over Wyckoff, and section 6 over risk management. And then I've got 1 hour, a couple of hours of streaming content over here when I live stream with the Discord. These webinars are vitally important when it comes down to understanding structure and putting your entire system together. And then we've got something pretty cool. We've got our entire trade rooms where I post all of my live trades. So you'll see over here, this was an XAUSD trade that I sent to the community yesterday on Friday. Entered with a triple M confirm. We hit partials at 1 to 4 risk to reward. Price ran all the way to 6 risk to reward before tapping me out at break even. So that's why it's just been a full partial week. Over here, Euro USD as well, looking to target the 4-hour week highs. Got the entry over here. We ran about 11 RR in profit. I secured partials at 6R, came back to break even. And then after this, coming back to break even, price went all the way up and hit that 4-hour week high. So it was a pretty annoying one, but that's how the game works. And then over here, we had another XAUSD trade run 11R before coming back to BE. So yeah, this whole week has just been full of partial trades, but those partial trades, it was another partial trade over here, has added up to a decent amount of profits. I'm up about 0.5% for the week on my 400K funded account. Yeah, so over here, my biggest trade of the month so far was, XAU USD that I sent to the group, targeting the 4-hour week lows, and we actually hit full 40 risk to reward, which was a return of about 4% on my funded account with a risk of 0.08%, which was really great. And this trade actually ran all the way to 80 risk to reward, which I closed at 40 RR. So you're really getting tons of value from the Discord over here. You're actually seeing me trade in live time with the content that I teach in the course. And then we have our SMC V2 Matrix hedging EA. You'll see a little video over here, which is based on a TMA band's volatility indicator, and the EA is being designed to hedge that. And I post all of my daily results over here. So this is my 10K funded account that I'm running the EA on, and this is my evaluation that I've been running the EA on. It's been averaging about 0.1 to about 0.3, max 0.5% in a day. The drawdown has been designed to protect that 5% daily drawdown on the funded accounts. So then you'll get access to our exclusive prop firm as well, with 10% off and a whole bunch of extra benefits. You also get unlimited time limits. You get a certificate from us once you pass. Also the public trading room, where you'll get tons of value from other members that have mastered the concepts that we teach here at Millennium Mindset Funded and are posting all of their live trades, and then just general chat and support over here. So this is everything you're going to get in the Discord community. We have created just over 60 funded traders this year alone. Well, we started the Discord close to February, beginning of March. It's now mid-June. We've created about 60 funded members, which is absolutely epic. So yeah, this was just a quick breakdown on how I understand structure, supply, and demand zone trading in the markets, really implementing the basics down to the nail. And that is how I've become so successful in managing my prop firm accounts and getting those consistent payouts. It's just because I understand the basics, I apply risk management, and I follow my rules and criteria. No emotions involved, no pulling out of trades early. Enter the trade, put my PC away, I'll go make some coffee, have some lunch, let the trade run. If my alert hits on TradingView, then I know, okay, we hit TP or stop loss, move on to the next trade. So that's what all of this is about. It's about putting everything that we teach here into one simplified mechanical system for you guys.